The cryptocurrency market took a nosedive. It happened fast. Investors are worried. What caused this sudden crash? On April 7, 2025, the total value of the crypto market plummeted. It was a sharp 10% drop. This brought the total market capitalization down to $2.41 trillion. The trading volume skyrocketed. It reached a massive $165.05 billion. That's a 293% increase. This crash has left many people wondering about the future of crypto. Is this a temporary dip? Or is it the start of a bear market? The answers are unclear. One thing is certain, this crash is a stark reminder of the volatility of the crypto market. The US started a trade war. It's making the crypto crash worse. The US imposed a 10% tariff on all countries. This started on April 5, 2025. There's no deal in sight with China. This is causing a lot of uncertainty. Investors are afraid of a global recession. They are pulling out of risky assets. This includes cryptocurrencies. The trade war is fueling inflation fears. This is adding to the negative sentiment. The situation is tense. Some analysts are calling it an economic nuclear war. Bitcoin was supposed to be different. It was supposed to be immune to the stock market. This idea was called decoupling. But the recent crash shows this isn't true. Bitcoin's price crashed to $74,434. This was its lowest point since November 6, 2024. Ether, the second largest cryptocurrency, also suffered. It dropped to $1,400. That's a 16% loss in just 24 hours. Other major cryptocurrencies like XRP, Solana, and BNB also saw big losses. This crash proves that Bitcoin is not immune to global economic factors. The dream of decoupling is over. The crypto crash led to a bloodbath. Over $1.4 billion in crypto positions were liquidated. Liquidation happens when investors borrow money to trade crypto. When the price drops, they are forced to sell at a loss. Most of the liquidations were long positions. This means investors bet the price would go up. They were wrong. Over 460,996 traders were liquidated. The largest single liquidation was huge. It was a $7 million Bitcoin USD swap. It happened on the OKX exchange. This event shows the dangers of leverage trading. It also highlights the panic selling during the crash. Section 5. Market cap takes a hit, billions wiped out. The total crypto market cap shrank significantly. It dropped by over 13%. It went from $2.67 trillion on April 5th to $2.31 trillion on April 7th. That's a loss of over $350 billion in just 3 days. The market has recovered slightly since then. It's back up to $2.4 trillion. But it's still way down from its all-time high. In December 2023, it reached $3.73 trillion. This crash wiped out months of gains. Section 6. The Fed's next move, rate cuts on the horizon. The crypto crash has people talking about the Federal Reserve. Could they cut interest rates soon? The trade war is a big factor. It's increasing the risk of inflation. The Fed might cut rates to stimulate the economy. This could weaken the US dollar. A weak dollar is often good for Bitcoin. Some investors see this as a potential positive. The odds of a rate cut are increasing. A week ago, the chance of a 0.25% cut was just 14%. Now it's up to 42%. The Fed's next move is uncertain, but it's something crypto investors are watching closely. Section 7. The future of crypto uncertainty remains. The crypto market is in uncharted territory. The recent crash has created a lot of uncertainty. What does the future hold for Bitcoin and other cryptocurrencies? Some experts believe this is just a temporary setback. They argue that the long-term potential of crypto remains strong. Others are more cautious. They warn that the market could be heading for a prolonged bear market. The truth is, no one knows for sure what will happen next. The crypto market is notoriously volatile and unpredictable. Section 8. Navigating the volatility, a cautious approach. The recent crash is a stark reminder. The crypto market is very risky. It's important to be cautious. Don't invest more than you can afford to lose. Diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes. This can help reduce your overall risk. It's also important to stay informed. Do your research. Understand the factors that can affect the crypto market. This will help you make more informed investment decisions. Section 9. Conclusion, a time for reflection. The recent crypto crash was a major event. It shook the market to its core. It's a time for reflection. The crash highlighted the risks of investing in cryptocurrencies. It also showed the interconnectedness of the global economy. The future of crypto is uncertain, but one thing is clear. Volatility is here to stay. Investors need to be prepared for a bumpy ride.